Good morning, everybody. So today I will talk mainly about inflation pressures, as we see that over the last 2 months, markets is switching to higher inflation expectations. We can see that in US bond yields, which are getting close to 3%. As I will show you, it is a very important technical resistance. Then I will talk about a few lagging commodities which are starting to bounce back, precious metals and grains. So if I start with US 10-year bond yields, this is the long-term chart of US 10-year bond yields since the 1980s. You can easily see that the 3% area is a major resistance zone. It's the upper part of the declining channel you can see here, which is 2 standard deviation above the long-term regression line, declining regression line, and it's also the high of 2014. So we can see easily here that a breakout above this 3% zone would be a major psychological event leading to much higher bond yields, possibly up to 4% or higher. So the fact that we are getting close to this level will be very, very important to monitor in coming weeks. If we look at point and figure chart now, the trend has already turned bullish a year ago. So the breakout was made in early 2017, and we had a bullish confirmation on bond yields at the end of last year with a breakout you can see here, and the upside targets available on point and figure charts are 3.5% or even higher. A quick focus on the S&P following this week's technical bounce before switching to commodities. As you can see here, there was a very significant technical bounce on the S&P 500, which bounced off its 200-day moving average a week ago. The market was strongly oversold, bouncing back, which is usually what's happening after a 10% correction like the one we saw last week. However, I'm a bit skeptical about the upside potential following this week's technical bounce. I think it will be difficult to move back above, significantly above 2800. So following this week's technical bounce, the upside potential seems pretty limited on the US stock market. Now if I switch to gold, you can see that gold bounced back this week. This was a very significant upside move. The good news for gold is that the prices held above the 1300 area, which was a very important support zone. It's already back on the 1350, 1360 zone, which is a major resistance zone, as you can see here. This zone has been challenged since 2013, and I think, given what's happening this week, that an upside breakout is becoming more likely. I cannot really tell you when, it can be anytime soon, but anyway, there is a higher probability of seeing a significant upside acceleration if we manage to break 1350 area on our gold. Last point is on grains. There was significant technical breakouts on most grains. So you can see here the chart of wheat. Very strong upside breakout on wheat over the last few weeks, which is a rather positive technical pattern at least in the short term. Same positive pattern on corn, which made a significant upside breakout over the last 2 weeks. And then same breakout similar breakout on soybeans. So the outlook is turning pretty positive on these three charts, suggesting that we are starting to see a catch-up of lagging commodities. So once again, it suggests higher inflation within coming months or for the year 2018. Thank you for listening, and have a nice weekend.